What's up guys, and welcome to today's video where I will be breaking down Euro USD and the US dollar. That is it. I'm not going to go into any more pairs because I'm just seeing a very high probability setup right now, and I've just got absolutely no interest in anything else because I really do like what price action is doing at the moment on this pair. So we had FOMC news come out. Now I'm purely a technical trader. I'm very well aware of economic events and I have, a sound understanding of it. You should do, at least if you're a Forex trader, you should at least have a sound understanding on macroeconomics and such. So let's just quickly have a look at the results today. Nothing changed. So it's still 5.5%. Obviously, the market has reacted negatively to it. So we can see by looking at the US dollar, had a pop to the downside. Now, being a technical trader, I really do want to solely focus on the technicals, okay? Because there are a lot of things happening right now that could be unfolding for another big move on both ends. Let's go back to Euro USD. What are we seeing right now? Zoom in on this daily chart. We had a few days of downside momentum. Just looking at this, the bearish candles are not filled with much volume. So there's not much intent to the downside. We are also creating, and this is one of my favorite technical patterns. If you're a student of mine, you know I talk about this all the time. So wedges, channels, all that sort of stuff. We are starting to see a bullish descending wedge, and the wedge is going into a daily level of structure. These two technical patterns are my absolute favorite to trade. If I'm seeing a wedge or a channel moving in a corrective manner down into a daily or 4-hour level of structure, that to me is the golden goose. Like, that's my favorite price action pattern. We're seeing that. And we are in an uptrend overall on Euro USD, so we're trading the trend. Beautiful. That's all I want. This is exactly why I only trade 1 or 2 pairs. And when you go for a swing trading move, you're risking 1-2% to potentially make 5 to 10% move, maybe even more. So I'm really liking this right now. I feel comfortable that I'm trading the trend. We know Euro USD is making higher highs and higher lows on the daily time frame, on the weekly time frame. All these time frames are matching up. No intent to the downside. Look at this structure, guys. Like, this is a very strong level of daily structure. And we have got also like a inverted head and shoulders. Now, I don't really like head and shoulders, inverted head and shoulders either, but if it matches up with all my other technicals, then, it's just an added confluence. So it's not bad to just point that out at least. So what are we gonna do now? Well, let's have a look on the 4-hour time frame. The descending bullish wedge is much more prominent on this 4-hour time frame. Let's neaten this up a little bit. Not sure what that is, but okay. So, look at this, guys. We also have the 200 EMA sitting on this daily level of structure. This is also a 4-hour level of structure. There's really not much to say, but this looks amazing. Like, this is a great setup. As I said before as well, like the head and shoulders and inverted head and shoulders, like I'm not really a huge fan of that. But on the 1-hour time frame, we do have what it appears to look like an inverted head and shoulders, which is a nice sort of added confluence as well. But, price is also approaching a 1-hour level of structure. And we also have a 200 EMA sitting directly on this level of structure. So we could see a little bit of hesitation on this time frame. Now, just remember, this is only the 1-hour time frame. So nothing to really be too caught up about. But, we are approaching that channel resistance of that descending wedge. So it wouldn't surprise me if we did see a little bit more of a retracement before a move higher. So we could push down a little bit lower. Like, we have some liquidity sitting here at these wicks. This could be another level. Where price currently is now to that area of liquidity, it's only around 16 to 20 pips away. So if you are looking at buying this pair, you could, if you're a swing trader, like, it doesn't really matter if you have a bigger stop loss. Like, if you've got a 50 pip stop, but you're going from minimum, absolute minimum 100 to 200 pips, there's nothing wrong with having a bigger stop, especially if you're trading with the trend. It's just ego. Having a 20 pip stop in these markets at the moment is in my opinion, suicide, like an ego. Like there's no, you're going to get taken out in a 1 minute candle, a 5 minute candle, and then it goes in your direction. You're going to enter out of frustration. There's nothing wrong with having a bigger stop, you know, if your stop loss is below like significant levels. If you're still risking your, you know, you're following your rules and you're risking your, you know, whatever percentage you want to risk and you're sticking to it, it's okay. Like even if you have to take your position size lower, it's worth it. Stop loss is only, you know, 20 pips and your risk is 3, 4, 5%, you know, that's when that 20 pip loss is going to be just as big as saying having a bigger stop and then you're only risking 1 to 2%. Like it doesn't make sense. So limit the ego, trade smartly, stick to your rules and just follow these key patterns. I don't like going anything below 1 hour or even sometimes 4 hour. So I'm definitely liking some more upside. We may see the push during London. Asian session, don't expect to see much. But London, we may see like a liquidity collection down to these areas here. And then we may see that final sort of push to the upside, break through these structure points and absolutely dominate that upside move potentially to this high point. That's my sort of first key, my first target. So from where price currently is to that area, that's 180 pips. So I really do like the risk to reward ratio on Euro USD. I think this pair at the moment is very attractive. Keep your eyes peeled on these levels and be smart when you do enter the trades. Don't be entering it at a like 4 hour high. So at the moment, we're not really at a high, obviously. Like this is a daily range, guys. Like this whole area from the high point to the low point, that's 248 pips. So it's a good range, you know, even for intraday traders, it's a great trade. 280 pips, that's a swing trade. Obviously, like if this really is going to create a new daily higher high, I mean, we could really hold this trade for a while. I'm just really liking the daily price action, loving the daily patterns. If we look left, we can kind of, I guess, mark up some areas where we could look to target above that current daily high where it is now. So I mean, we've got an area around here and we also have this area, which I'm looking to probably target in the long run. So 1.1480, just to be a bit more precise with our sort of rounded numbers. So 1.1480, that's kind of where I guess I'll be looking to target in the long run for Euro USD. That's a great trade. Look at that, guys. Like that's a really great trade. First area would be obviously this daily high point, but if this currently really is a new daily higher low, then we know what happens after that. We get a new daily higher high. That's history repeating itself. DXY US dollar, obviously we're seeing exactly the inverse happening on this to Euro USD. So with Euro USD, obviously we're seeing that descending wedge on the daily. For the US dollar, we are seeing the rising ascending wedge, which we know is bearish. So if we just quickly draw our daily sort of patterns, obviously we can perfect it when we go down to the 4 hour time frame. But, you know, this is looking really good. And we do have an area of liquidity here where price pushed up into. There is no intent to the upside, not much volume in these candles. Still got an hour and 20 minutes before this current daily candle closes. We have got a wick rejection up to this area of liquidity. Price didn't really hang around there very long, and I am looking for this to break the wedge and head much lower, at least starting with this daily lower low point, and then potentially a new daily lower low to be formed and created. But, you know, rising wedge into an area of liquidity and structure on the daily time frame, I mean, there's not really too much I have to say or break down to know what direction I want to see this price action. But 4 hour time frame, again, exactly inversely correlated to Euro USD. Look where the 200 EMA is sitting on that 4 hour level and daily level of structure. Look at Euro USD. We got that 200 EMA sitting on the 4 hour level of structure. DXY, same thing, just inverse. Like perfect inverse relationship. 4 hour time frame looks very bearish. We closed bearish on this candle, but you know, like I said before, this is more prominent. This rising wedge is more prominent on the 4 hour time frame. Looking very lucrative, guys. Looking for that break. We have got a little area of structure here, and then we may just see this melt once, or if this does break. That's it, guys. I mean, that's all I really wanted to break down. Euro USD, US dollar. We've got some Euro news coming out actually tomorrow, interest rates. So this is a pretty big report, so keep an eye on that. We may get that liquidity push for Euro USD to the downside at this news event, because we do know that interest rates are always going to be the king of market movements. It's going to be whipsaw most likely, like it always is in most interest rate decisions. So just be aware of that, and just if you want to play it more safe, wait to enter those trades after, you know, Euro USD news has dropped. So let's just be aware of that. And then there's a press conference as well for the ECB. Aside from that, I mean, we don't really have too much. We've got some GDP for CAD. USD, we've got some PCE, employment cost index. I don't really see that as a big market mover, to be honest, but it's just good to be aware of it. Stay safe out there, guys. Use good risk management as always, and be patient.